everyone. Welcome back to another episode. With joining us today is Dr. Jha, the Group Chief Economist and Head of Market Research for RHB Banking Group, and to pick up the part on Budget 2021 from the fixed income and currency perspective. Thank you again for joining us, Dr. Jha. Okay, let me just get right to it. Over the last MPC meeting for year 2020, Bank Negara Malaysia has decided to keep the interest rate unchanged. So the proposed budget for 2021 is expected to record a narrower deficit of 5.4% of GDP compared to an estimated 6% this year. The Ministry of Finance has forecasted a real GDP growth to be 6.5% to 7.5%, which I think you have mentioned earlier, from a contraction of 4.5% on year for 2020's forecast. So the question is, do you think that it is fairly optimistic figure? And is it realistic for Malaysia's current economic situation?
Right. So we're right in the bang of the forecast, middle of the forecast range of the Ministry of Finance, 6.5% to 7.5%. We're at 7%.
Okay.
So of course, the conclusion would be looking at our numbers, we're comfortable with the Ministry of Finance projection. But living in these uncertain times, as as a financial institution, and particularly like me, looking at the world, I've had a experience at the global level across the world.
That's right.
I'm a global expat.
Correct.
Okay, so I have the benefit of having traveled the world, but also the disadvantage of seeing the risk out there. You can call it disadvantage or advantage, whatever you like. It's up to you, right? I see three risks, main risks. First and foremost is, of course, the timing of the actual implementation of the vaccine to fight COVID-19.
Right.
Right? We just don't know. Right? When is it going to be implemented?
That's true.
Not just the actual announcement that it's ready. Because as you've seen, we had this vaccine of sorts ready via testing in Korea.
Yes.
And basically several individuals, a significant amount of individuals perished.
That's true.
I'm not saying that's what's going to happen with any other vaccine. I hope not, right? We're all praying that the vaccine comes soon.
That's true.
That's big uncertainty, right? Because what it does is complicates the situation for all of us, right? As you know, our policy at RHB, 50% capacity, right? The rest of the people work at home, right? And so it creates that logistical issue. So that obviously has a significant impact on economic activity. That's one big risk. COVID-19 vaccine, right? When is it going to come? Actually come and we can put that injection in our arm, right? The second is the U.S.-China trade relations.
Right.
How will it evolve? We've had basically most of the votes are in the United States. We're waiting for a final result. Whoever takes over the presidency or maintains the presidency, how are these trade relations going to evolve?
Right.
And trade relations are not something that get fixed overnight.
That's true.
One has to understand that the logistical aspect of putting on tariffs and removing tariffs is not a small item. It requires thousands and thousands of pages of regulations to be changed in order to get those tariff changes.
Correct.
No matter who's in place. So bottom line, risk number two, how are the China-US trade relations likely to evolve? And third, in the back of my mind, always now operating out of KL, right? Beautiful country. Thank you for having me, is that where do oil prices go?
Right.
Which has a significant direct and indirect effect
Impact,
on the economy. So there are sizable risks in terms of the future path of oil prices. So always keep these three, I would say, your clients and investors informed. Monitor. If we're not giving you that information, I'm sure you guys watch TV. Monitor these three big risks out there when you're making any decision, whether it's a life decision, whether it's a financial investment decision, whether it's a professional decision, whatever. Monitor these three big risks that RHB is highlighting to you already.
And I'm sure our viewers would like, that's an important bit of information for our viewers. Okay, in view of the current situation, do you think there'll be another round of interest rate cut in Malaysia?
Our expectation is that there is limited requirement in the next 6 months. Our house view is that we're not expecting any cuts in the next 6 months. Beyond the 6-month time horizon, we have to track the evolution of these three risks, as I just mentioned: COVID-19 vaccine, U.S.-China trade relations, and third, oil prices.
Oil pricing.
So it's predicated on what happens, a lot of it which is external to us. It's not really under the control of Malaysian policy makers such as Bank Negara or the Ministry of Finance either.
Next, Dr. Jha, maybe the interest rates will be at a neutral stance. So what is your view on fixed income in Malaysia, especially now when investors are looking especially for yield?
Right. So just to clarify, we're in a loose monetary policy stance in Malaysia and the rest of the region, broadly speaking.
Right.
Okay. And keeping in mind that the domestic interest rates to a certain extent are also driven by external developments and the U.S. Market and U.S. interest rate.
Right.
Right. As an example, leading to your question on the fixed income markets in Malaysia, a certain portion of your asset allocation should be in fixed income.
Right.
Right? Because of the uncertainties that I've just mentioned.
Correct.
Growth, uncertain. Inflation, highly likely to come back in the near term, and basically the prospect for risky assets highly unclear. So basically, fixed income is a natural attractor for investment.
That's right.
Right. So the opportunity set when we look at fixed income. So our house view, for example, on my fixed income strategist, the view on, let's say, 10-year Malaysian government bond yield. Right. It's steady as she goes. That's it. Right. Steady as it goes is a good thing.
It's a good thing right now.
Is a good thing. And the risk, I think, to basically, let's say, 10-year bond yields in Malaysia, MGS, Malaysian government securities, to clarify, is that its risks are tilted to the downside, that yields actually come down. But as you know, the relationship between yields and bond prices, as yield goes up, the price of bonds go up.
That's right.
Right? You may be collecting a little bit more lower on the coupon, but basically you get capital gains on the bond. So I would say basically it's good to have a certain portion of your investment continue to allocate to fixed income.
Okay, Dr. Jha, what about the currency dynamic now that will be ongoing in view of the Budget 2021 and BNM stance, especially on the USD against Malaysian Ringgit?
Right. So when you look at any currency, right, you just mentioned, what's the view on dollar ringgit? So you have the dollar part and then you have the ringgit part.
That's true.
Right. So I think essentially the bias right now is that market, is in the consensus view or market expectation is that the dollar will weaken. Good for us.
Yeah.
Right? People earning in ringgit.
Right.
Right? And spending in ringgit, right? We can buy more U.S. goods at a more favorable exchange rate.
That's right.
On the ringgit side, it doesn't seem that there's any sort of, I would say, instability, whether it's a macro factor or essentially a market factor, right? From the macro factors, which impact currency, are basically outlook for growth. So we're in a recovery path,
right?
Whatever that may be, right? With all the risk out there. Yes, we're at 7%, but there are risks to that 7% forecast for next year. So that's okay. Then, of course, as you know, basically the trade balance.
Right.
So higher trade balance, meaning exports are far greater than imports. So you are basically net exporter rather than importing. That's favorable for the currency. So we have a forecast of a significant improvement in the essentially what we call current account balance, which includes the trade balance. So the trade position of the country, in plain English, is likely to improve next year. Interest rates, as I've just said, right, steady as she goes, both in the policy interest rate set by the Bank Negara, overnight policy rate, and essentially the Malaysian government securities bond yield, right?
Right.
Keeping in mind that basically the U.S. is headed on that trajectory of declining interest rates, right? Simply because they're at that juncture where COVID-19 hasn't been stabilized yet, and the outlook on growth is basically uncertain, and inflation is declining. So what that works towards on the ringgit part is the interest rate difference between Malaysia and the United States provides that support for us. Right? We have a relatively higher interest rate than the United States, and of course you buy ringgit.
Yes.
So we again, being very cautious in this very unstable, or let's say cautious outlook on the global macro and markets front, we have penciled in a stable dollar ringgit level, roughly around the 420 for the next 6 months. So the RHB house view, dollar ringgit around 420 for the next 6 months. Don't worry about essentially any sort of instability, at least for the time being, until we have a big, more, let's say, better assessment of all the risks that I've alluded to time and again when I'm speaking with you.
Yes. Okay, Dr. Cha, thank you so much for joining us today. And I'm sure our viewers have learned a lot from listening to our session today.
I hope so. I hope I haven't confused them more than they already are. Yeah.
It was very clear.
Thank you very much.
Thank you, Dr. Cha. For our viewers at home, thank you for joining us. And if you'd like to find out more on market insights or any other thing, please leave a comment below and we will get back to you. Or you can also follow the link that you will find below. Please don't forget to share this video with your friends and stay safe until the next episode of RHB Money Chat. I'll see you soon. Thank you.